Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to Forecast Update Live, where each month we will gather to discuss our dairy market forecast. I'm your host, John Spainhour. We're joined today by Erica Medke and Phil Plord. To get us started, Erica, let us know how our forecast has changed from month to month.
Hey, John. Thanks for having me here. Very excited to share some of the updates to our forecast. I would say in general, most numbers are going to be a little bit higher. The biggest change for us this year is butter for the rest of 2023. And that certainly has been a big debate among our shop of how high can butter go, certainly after this latest run.
Erica, that's pretty interesting regarding butter. What went into that conversation, and where do you think prices can go from here?
Well, for those of us who know the team here at Everag Insights, it was quite a heated discussion with many on both sides of the camp of, are we going to $3? Are we not? Today, I'm arguing the bear, and I probably was the bear in the conversation of, I don't think we're going to get to $3, but again, this is the butter market, and anything is possible here.
Yeah, I mean, I think that one of the realities that we're facing is that butter seems to be in strong hands, and as we go through seasonal, there's less cream around seasonally. We're about ready to go into the peak demand season. People who have butter in inventory, they have money in that inventory now after kind of skating along at about break even for most of the year, and so the question becomes, where does the incentive lie for people to sell this market off? And where does the volume come from? And it's just been hard for us to imagine, that someone's going to rain on the parade all of a sudden and bring gobs and gobs of butter to Chicago in a way that brings the price sharply lower. Now, markets work, right? If the bid backs off, people say, hey, this 270 number is too expensive. Basis starts to erode. People start building a little bit of inventory again, makes them nervous to build inventory at 270 instead of 240. I think all those things, factor into the mix. But, we saw the butter market go to over $3.25 last year. I don't think it's going to happen this year. I don't think we're going to get to $3 either. But I think it's a fair conversation to have when, that's sort of like the boogeyman in the room, right? Well, last year went to $3. Can it happen again? And I think that when you have a price increase like we've had the past couple of weeks, if you're inclined to be nervous, seeing the market go up 20 cents over the course of 10 or 15 days doesn't really keep you calm and might actually knock you off the fence and jump into the mix, which wittingly or unwittingly perpetuates the price increase, right? So I don't know, John. I mean, that's, you've seen this before too, right? It becomes sort of a multi-layered exercise of trying to figure out game theory exercise. That's exactly right, Erica.
Well, that old adage of bull markets have long tails. And I think everybody that paid $320 last year is saying, well, $250, $270 is not $320. So that's been kind of the mantra all year long, and we'll see how that plays out this year.
Yeah, at some point, $3 does become $3, but I just don't think we're going to get there. But I wouldn't rule it out. I mean, there's the chance is more than zero.
Thanks, Phil and Erica. Okay, every month we like to take this opportunity from a broader standpoint to discuss the bull and bear markets in general. Erica, today you're taking the bear side of the discussion. Take it away and let us know your thoughts on the market.
All right, so let's run down through some of the commodities. On the cheese side of things, the latest cold storage report certainly is indicating more cheese hanging out in the coolers. That's in addition to all the comments we're hearing about older cheese, not just CME eligible product that's 4 to 30 day old. Certainly a lot of opportunities for buyers out there. And then the other thing, this recent run up in prices will do exactly as Phil says, markets work. This is going to kill off a little bit of demand. It's going to be a little bit harder to run some promotions. And that I think has been keeping the market alive at retail to keep moving product with consumers. And finally, there's more capacity coming online. Now, we all know it's coming. We all know it's here. But more cheese is still more cheese. On the butter side of things, I think we started to beat that up a little bit. But I would say that some of the reasons not to get too crazy in the butter market is we have seen buyers take some more coverage this year. So they're not as exposed at this point in the year as they were last year. So some of that efforts to hedge and lock in some prices have already been done. Buyers do know how to get skinny on their supply chains when prices get high. So, in terms of butter trade, the US has been importing more butter fat, so filling in some of the holes. So, our imports are up 36% through June, at the same time as US exports are down 32%. So, net, the US is a much larger importer, and we're retaining butter fat domestically. As we shift into the non-fat dry milk space, I would say that this is very much a global marketplace. We saw GDT this week, whole milk powder, a big drop, down 7.6%, going to put some pressure on the skim milk complex. And the US price, while it is the highest in the world, it's not that far from Europe or New Zealand. And we can't stay this high for that long. We can't stay out of competition. And then just a note on the whey complex. As long as we've got more cheese coming, there's more whey coming.
Thanks, Erica. Phil, I know you've been waiting to take the bull side of the discussion, so take it away.
Yeah, it's not quite as lonely here with the in the bull camp this month with the rally we've seen in cheese and butter. I think that if you want to be bullish, the number one reason to have a friendlier view of these markets is milk production. In June, we saw output turn flat. We saw cow numbers down month over month. We saw cows down year over year for the first time in a few months. So there's less cow power. We have, incredible margin compression on farms. We see slaughter rates elevated. So there's liquidation pressure out there. And so, there's a good chance that we've rounded the corner in the US anyway, in terms of supply actually turning lower. And, less milk is less milk. So I think that would be the number one reason, to be bullish. I think number two reason to be friendly would be, I think that the consumer has shown a little bit more resilience than some people thought or feared. Retail demand for cheese and butter has been pretty good. It's not been spectacular, but we've been kind of grinding out victories. The food service space, while traffic patterns remain below year prior levels, they're less below than they were before. And we've seen back-to-back months where the dollar volume into restaurants was ahead of the pace of inflation, which says there's more volume being consumed. And so, the consumer has hung in here better than some people thought they would. So if the economy doesn't totally fall apart, which I don't think I've ever been in that camp myself, but, the consumer kind of hums along at a medium rate of speed domestically, it says the holidays aren't going to be terrible. There's no Grinching this year unless we see the stock market fall apart in the next 6 weeks or something like that. So I just think that the second reason to be friendly would be consumer demand holding together.
I think when we spoke at this time last month, the cheese market was in the 135s, right? So to up here at 196, certainly something big changed in the cheese market, at least.
Yeah. And I think, another reason to be friendly cheese specifically is that it's a fresh cheese market, right? It's a 4 to 30-day-old market. And so, that's what has to come to Chicago. And we can get tight on that, right? Warm, hot weather, a spurt of exports. And, we could go 2, 4, 6 weeks where there's a lot of cheese around generally, but not a lot of fresh cheese that matters at the Merc.
Well, you're exactly right. 4 to 30-day-old cheese is what we trade here at the CME, and that's has always been important and will continue to be important.
We mention it at least 2 or 3 times a year, John.
Okay, moving on from here, Phil, you always have just a very unique perspective that you like to bring once a month. You call it your favorite look. This month's favorite look is going to be centered on Chinese birth rates. And when we look at the results of the GDT yesterday, I think it's just ever important that we focus on stuff like this. So I'll let you take it away.
Yeah, a hat tip here to Mark Majeros on our team who brought this chart to my attention. It's an incredible chart, right? I've heard, that Chinese population is going to be shrinking and that there's a demographic challenge ahead for the country. But when you see the birth rate go from, 15 per 1,000 10, 12 years ago to just about half of that today, you're talking about a real slowdown in terms of potential population growth. So in 2012, we peaked at 14.6 births per 1,000. We're now at 6.8. And, we've seen China evolve in its stance, right? It used to be one-child policy. And then we had a 2-child policy in 2021. And then last year, we heard talk of a 3-child policy. But consumers in China or people in China say that, yeah, kids are expensive. They're hard to manage. One is plenty. And so, the efforts to loosen the grip on population, which were, a core tenet of the Chinese model for years and years and years, so the efforts to say, hey, be fruitful and multiply have basically failed. And this means less consumers going forward in a longer term way, but also in a very short term way. Fewer babies is, fewer mouths for infant formula, youth nutrition, all those sorts of things that do matter in the dairy industry. So a real fascinating look that raises some really interesting questions about China's structural demand.
And China has been and will continue to be very important to the health of the international dairy market. So when we do see demand factors like this potentially backing off and in reality backing off, it seems like that has broad implications to the price of dairy throughout the world.
I mean, look at the price of lactose today, right? I mean, I'm not saying it's because birth rates have fallen another 2 or whatever, but these things do matter in markets like lactose and high protein products, et cetera.
Phil, thanks for bringing that. And to Mark Majoros, thanks for creating that. That's just a great look and, as always, a unique perspective. That'll do it for this month's episode of Forecast Update Live. Thanks to all of our panelists. Thank you to everyone on the EverAg Insights team for their work on the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. If you like this video, be sure and subscribe on our YouTube channel. Please give us a thumbs up and share with a friend. We'll see you next month for another edition of Forecast Update Live.